All right, ladies and gentlemen, we got a late night update for all of you guys because some things happened today that we need to talk about, including Netflix earnings. Futures right now are up about 0.60% on the S&P 500. And if you are part of the trading group, well, congratulations. It looks like our trades are going to hit, baby. The markets are starting to get a little bit more bullish. And the lack of news we got from Fed Brainerd today, well, has really chilled out the odds of a 1% rate hike, specifically during this blackout period over the next couple of days. So we're going to dive into all of this key information. Hit the like button, subscribe to the channel if you guys have not already. Thank you for doing that. And if you guys want to come trade with me live in real time, link down below in the description of this video. First and foremost, we had Fed Brainerd that was today at 2:35 p.m. She did not say anything that confirmed a 1% rate hike. That was the last Fed speaker to speak before we get the Fed interest rate decision coming next Wednesday, 2 p.m. That is on July 27th. We currently have a 37.4% chance of a 1% rate hike. This is not priced into the markets. We do not see an over 60% probability of a 1% rate hike. Why that is so important is because we're not going to have anything else that in theory should open up the door for a 1% rate hike. And the Fed has not went against what the Fed futures market has been pricing in as far as Fed rate hikes in over 40 years. So if the Fed did do a 1% rate hike, well, it would be unprecedented. It would be something we haven't seen in half a century, much the same way as we have not seen high inflation like this in almost half a century. So there you guys have that information, and I think that is bullish for next week because, hey, we have the Fed the 27th. We have advanced estimates for Q2 GDP, which the latest estimate from the Atlanta Fed still currently sits at negative 1.6%, which would be the same reading as we got for Q1. That would mean that we are in a technical recession, but maybe it's only an earnings recession. Maybe the GDP does not actually put us into a economy, or I should say consumer recession. That's the word I was looking for, consumer recession. There's a little bit of a difference between, earnings, what's happening with the dollar, and that pushing us into a earnings recession rather than people just stopping spending money how they usually do. And what an earnings recession more than likely would look like this time around would actually be due to the dollar. The US dollar has been strengthening, so companies that do business overseas, like IBM does 95% of their revenue overseas. Netflix does over 60% of their revenue overseas. Well, when the dollar is strengthening, global currencies are declining, and actually this is the first time in over 2 decades where €1 was worth less than $1. When does that ever happen? That never happens. If you guys have ever bought anything online with euros, well, you would know that it's like $100 equals like 75 euros. That's more like normal, what you could expect, not a 1-to-1 ratio. So that's an example right there. It converts into less US dollars once companies like Netflix, IBM, so on and so forth have to convert those earnings in foreign currencies back into US dollars. So that could be what is going on. That is causing us a lot of bullishness in the markets. Believe it or not, UUP, the US dollar weakening, is helping out the stock market, and that is likely to continue throughout the rest of the day, over the next couple of hours once we do start trading. So that has been very bullish. The Fed has been very bullish. And Netflix earnings, it was not great by any means, and this is where people might find confusion. It was not great by any means, but it was better than what it could have been, because Netflix only lost around 970,000 subscribers during the second quarter, a smaller loss than the 2 million it had projected last quarter. So this is called a sandbag. It means a company, they know the numbers are not going to be good for the next quarter. They're already seeing their stock price declining so much that they way overestimate their potential losses or the negative things that could happen over the next quarter. So it's a lot easier to beat those previous expectations. When Netflix says they expect to lose 2 million subscribers and only lose, 45% of what they expected to lose, well, that is bullish. That is better than what it could have been because markets were expecting a loss of 2 million subscribers. At that point, markets were saying, hey, could Netflix lose 4 or 5 million subscribers? That's the narrative. So this looks a lot better. Netflix also did say that they expect to add around 1 million new net subscribers for the third quarter, so getting back on a growth trajectory, and that is obviously going to be a good thing for all streaming stocks, but for subscription-based companies in general. And all of your major companies, your Apples, your Googles, your Microsofts, any large trillion-dollar company has a subscription base along with it. You know, Apple Music, Apple, all their different, you know, platforms and programs that they do have. You know, that's going to boast well for the largest stocks in the world, which do control the markets. Like I said, you're over $1 trillion companies. So there is all of that. As far as AMC specifically, we can see the option activity was very bullish for most of the day, but it actually only went down to a 26% positive order value, 4.8 million dollars worth of orders on AMC stock, 31 orders in general, in total, but it was really skewed by this one order that was worth about almost $3 million, a September 16th $15 put. It looks like somebody definitely wanted to beat down the stock, and that is what we seen around 2 o'clock, right? 16, like when this says 16, that's the end of trading. This order came in at 14:23, so it came in at 2:23 p.m. and that's where AMC really started to get knocked just over the last trading day. So I think that's important to point out. Large options are having an impact to AMC stock. Now, the current dollar amount that is sold short of AMC is $1.54 billion. This money will make its way into our portfolios in due time. Be patient. Just be patient. Ride it out, guys. AMC is able to perform this well, you know, when the markets are still fearful. Imagine when the Fed does U-turn and they say they're going to stop raising rates so aggressively. It could very well be July 27th. So that's kind of my bullish case. If the Fed does not come out and say that they're going to stop raising rates July 27th, you go into a technical recession and earnings are bad, well, that's obviously not going to be a good thing across the board. So I think a lot of this rally or potential large rally to come is going to be based around the Fed and still what happens with the Fed, so do not get confused on that. Now, the estimated short interest of free float is 18.06%, free float on and loan 25.65%, shares on and loan 132.22 million, days cover 3.22, cost to borrow 10.61, and 100% share utilization. Cost to borrow max at 11.08, cost to borrow average at 10.53%, and cost to borrow minimum at 6.2%. And obviously, if we look at AMC on a technical basis, AMC is looking very good, going through a little bit of consolidation. You could call it that, down about 1% for the last day's trading. We're obviously going to start trading here over the next couple of hours, so by the time you guys see this video, it might look a little bit different, but all of this information is still relevant. And for the trading day that is upcoming, we do have Tesla earnings, which are going to dominate headlines. We already know what their deliveries are. The biggest question is going to be, how does that foreign currency conversion play into the profitability? How profitable is Tesla still? Because that makes all of the difference in a valuation sense. So that is going to be all for this video. For tomorrow, you do have Snapchat as well. That will be on Thursday and after hours. That's the main one I want to watch, but you also get American Airlines in pre-market and AT&T, as well as Domino's and Philip Morris. So a big week this week, an even bigger week next week. And by and large, what we're seeing right now is very bullish. I think a lot of earnings could be okay for a lot of different sectors. I do still have concerns for guys like Apple, guys like Microsoft that have a lot of products that they sell, specifically Apple. I think that one could be a real thorn in the backs of markets this earnings season around. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. Comment down below. Let me know what you guys think about all of this. Did you trade Netflix? Are you bullish? Are you bearish? Why do you feel how you feel? Let me know. I need your opinions, because any opinion is valuable, especially if you provide a reasoning behind it. So that is it. If you guys want to come trade with me live in real time, link down below in the description of this video. But you guys enjoy the rest of your day, and I will see you in the next one.